Are you thinking that we're maybe approaching another recession, and are you ready to buy debt at a discount again?
So, first of all, David, pleasure to be here with you on Bloomberg. I agreed to come. The moderator is right to say I don't usually do this. I do this because you're so good at it.
Well,
and I also do it because truly as peer-to-peer, if you ask me too tough a question, I can always turn that on you and say,
okay.
And what do you think, David? So,
all right.
But to answer your question, we started Apollo 29 years ago this week, and it was actually in the midst of a global recession. We started Apollo out of the ashes of a firm I worked at for 13 years called Drexel Burnham Lambert. And in the spring of '90, when Drexel went under, the world was a mess. You had the oil shocks, you had the world in a recession, you had consumer confidence down, you had the S&L crisis, and it was really in that environment that we began. We were lucky enough, sometimes dumb luck is the best, but you have to know what to do with it, to get money from a big French bank, the Credit Lyonnais Bank, who started us out in June of '90 with about 800 million of capital, to really take advantage of the dislocations in the market. And our backgrounds, my partners and mine, was really as students of capital structures. We had gone to the Mike Milken School of capital structures analysis. I had been the head of M&A and then corporate finance there, so I dealt with most of the private equity firms that were then in existence. We knew what it took to build a good capital structure in the right time, but we also knew the pieces of it so that when things went bad, how to deal with a delevering process of buying debt and restructuring the company. So fast forward, if I look back at the last 29 years, there have actually been 4 real cyclical downturns in the last 29 years. And kind of one of the great arrows in our quiver is that we have studied companies in about 9 different industries that we specialize in, and we know which debt we're interested in buying at discounts, at what prices, and then our hope is you either make money on the debt, or the greater hope is that it becomes a new form of a buyout because you work with other creditors and you delever the company to an appropriate level, and hopefully if you've accumulated enough debt and exchanged it into the new equity of the company, you become the owner on a delevered basis. And so we've been doing that now for 29 years through 4 cycles. You mentioned the Great Recession of 10 years ago, and our feeling there was it was a great time to back up the trucks as long as we had real conviction on the credit. So we did it sometimes with third parties, and we did it sometimes with our own portfolio companies, which we still believed in, and it was basically a way of averaging down our price by buying the debt in at deep discounts. So you ask about where we are now going forward. We've never felt that we had a crystal ball. Look, we're 10 years into an upcycle, so at some point, the music's going to stop, and at the same time, we have an administration, like them or not like them, but they've done a pretty good job in extending the economic growth and consumer confidence, and kept inflation down. And therefore, it's very hard to say whether we're going to have another cycle with interest rates where they stand now and with the growth and inflation numbers where they stand. We might, probably won't be until after the next election, but that's not that far off. So the key is to be prepared. We go through hundreds of credits in the industries that we like, and study every part of their capital structure and know at what prices we want to start buying the debt. And you're right, we've had the benefit of now 30 years of 29 years of doing this, and so we do have a lot of conviction, and it is a very useful as a value investor pathway to finding great value.